Apes and apettes, welcome back to the channel. I did not expect to actually make this video, but I was thinking that I probably should. And this is not clickbait, so if you're going to comment clickbait down below, at least comment why I am wrong. So make sure to hear the thesis and let me know why I am wrong. But we're going to talk about, like the title of this video says, why the Moass is 100% going to happen in 2022. Now, things did develop a little bit different than anybody had expected, but that is honestly to our benefit. And as we do know, stocks, once they come down, that equals hedge funds having less capital to service their margin calls. I also want to talk about how markets revolve in cycles, right? If you guys have been subscribed to this channel, if you've been in the markets for a while, then you know things tend to go in cycles. Sometimes it's pharmaceutical stocks that are doing well or doing bad. Sometimes it's your value stocks like we've seen over the past couple of months that have done very well. Sometimes it's your growth stocks that do really bad like we've seen over the past couple of months. Sometimes it's your meme stocks that do well. And that all plays into the grand equation of what we are going to talk about here in this video. So I hope you guys do find value out of it. Other than that, I do want to talk about the futures right now that are down quite substantially, but why we could actually see a pretty muted day or a positive day tomorrow. There's a couple things I do want to touch as far as that. Obviously, nothing is guaranteed, and don't make any trades based off of what I am saying. So let's first off start with how the Moass, or better yet, why the Moass is 100% going to happen in 2022. Obviously, I'm not a financial advisor as well, but I think it's pretty clear to see what is going on right now. So like I just said, we've established many times that if the markets fall, say we go back to March 2020 levels, considering all the margin debt, considering, all of the capital that would be sucked out of the markets, you're very vulnerable to see short squeezes like history has showed us back in 2008 through 2009. That's a fact. We already know that. Nobody can deny that. It happens just like that. But I think what the real strength is of AMC, besides people that are just buying and holding, it is that it's a part of its own sector, right? So you have AMC, you have BBBY, you have GME, you have all these, really those are like the three stocks I feel like that move each other. So if one gets good news, the rest of them pop. Now, what we have talked about for a while now, and what I'm sure other people have talked about as well, is that the markets are likely to come down a lot more. My personal theory is that we are going to come down possibly to this $365 to $400 range on the SPY, and we're going to kind of trade sideways for a while. Because what I see happening right now is Fed Jerome Powell is between a rock and a hard place. He has to get inflation down while at the same time try not to crush markets. But ultimately, inflation is more important because Biden let him keep his job and he needs to make inflation go down so Democrats win the midterms. That's not even political. I don't care. All I care about is making money, but that's what is going on right now. So Jerome Powell will sacrifice the markets to make that happen, to essentially keep his job for another 4 years, for his whole term. So that's out of the way. But I don't think Fed Jerome Powell and the Fed, or even investors in general, are really expecting what is going to happen. That is revenue slowing down. So I think the Fed is going to tighten this whole time. Once they realize, hey, growth is really slowing down, people are not spending money, that's when you do see course reversal from the Fed, and you see the Fed possibly cutting rates or not raising rates for a while. Fun fact about that as well, the Federal Reserve just put out a survey this morning that said people are not spending as much money, a dramatic decrease, in their own words, the amount of money that people are spending on non-essential items. So things other than food, shelter, transportation, people have dramatically stopped spending money. So depending what course they take, maybe they listen to the economy and what's going on, maybe they don't. I don't think they will because of the reasonings that I just said. Now, where this really turns the tide for AMC, besides the fact that we're all buying and holding, is that as the markets go down, hedge funds like to pick on these stocks that are really retail stocks. Your YouTube stocks that people talk about are the stocks going down the most. So they're seeing the most shorting activity. Every single day, they're getting shorted into the ground, and the risk management aspect of shorting AMC or GameStop goes out the window to the hedge funds because they see this as easy money. And if we do go down to, let's say, 365, we trade up to 400, fall back down to, 370, trade in this range for a while. Once you get really good news, like we seen with BBBY just a couple of months ago, they were up like 100%. AMC was up like 25%, GameStop was up like 25%, and just the other day when GameStop announced their partnership, or not partnership, but they were creating their NFT marketplace, that shot GameStop up like 30% and AMC at a high of like 17% in after hours. Now, when liquidity is drained and when these hedge funds are picking on these stocks, they make the situation so much worse for themselves. They put themselves in a really bad situation when liquidity will be restricted for an extended period of time. That's when you see shorts be margin called and they don't have the funds available and they have to cover on those short positions. And the duration here is what really makes me so excited, and the fact that we still have a lot of room to come down right now. Like I mean, people think this is a bad crash right now, but if you were invested in 2020, this was like the whole damn world was ending. This was a very exciting time filled with, like I've said many times, a lot of opportunity. And I mean, I'm not your cheerleader here. I'm not your financial advisor. I am personally explaining what I am doing and my thought process here. And I hope it does resonate with you, because the fundamental, principles of a short squeeze that you need to know, like the video we just played a couple days ago, is of the hedge fund saying most opportunities are found in markets where liquidity is actually scarce. This is a huge opportunity. And in my opinion, there's no way we don't see the Moass in 2022. Shit is about to hit the fan, ladies and gentlemen. Once the markets actually realize the Fed's super hawkish, inflation is super high, and earnings and spending are slowing down at a dramatic pace, it's going to get really bad. And we're even possibly talking about layoffs. And I hate to be the guy that says, hey, we're going into a recession for years. I don't necessarily think it's going to be years, because I think the Fed will come in and bail us out. But there's something, kind of crazy to analysts that they don't see coming. But when you give out trillions of dollars of stimulus, people spend that. So companies, for the past 2 years have built more factories, have hired more workers, have done all this. Once that money goes away, once demand slows down, these companies oftentimes are forced to start cutting hours, start laying people off, so on and so forth. So the economy is likely to shrink just a little bit. Maybe we'll go into a small recession, but mix that with everything else that is going on right now, and I think that is a recipe for disaster for the stock market. And AMC is in a really good situation right now. Believe that or not, I will be one to tell you, I will either look like a genius in 6 months from now, or I will look like a complete dumbass. But I think there's about a 80% chance, or 80 to 100% chance I'm going to be very smart on this. And there's a small percent chance that the markets could just rally and forget all of this. Very, very small. I would honestly likely put that at like 3% chance. The markets just rally back to all-time highs. I don't think that is logical at this stage in the economy. So that is the scoop on that. That is exactly where my mindset is, and that is why I am so incredibly bullish on AMC. A lot of people say, hey, I love how positive you are, but the honest truth is I can't help being so positive when things are looking so good. I've been begging for a market crash to see the Moass for like 6 months now. So it's finally here. I'm not going to be sad about that. I'm not going to be depressed about that. I'm not even going to look at my position, honestly, unless we do start to see a rally. Then I'll pay a lot more attention. Then I'll put more, continue to help the rally. Something weird with me personally, I guess you can call it weird, but like when AMC is rallying, I like to put in more money when it's rallying to like, I'm helping it go up, not really a FOMO thing, but because I buy all the time, but it's kind of interesting to think that you're helping the stock going up. Other than that, forget all that. That is what you guys need to know as far as the Moass in 2022 is concerned. Now, why the markets might actually see a substantial rally tomorrow, if not a somewhat muted day overall, is because we are not seeing any major catalysts tomorrow that I am aware about. We might get a couple small data points here and there, but nothing too crazy. We have Microsoft earnings after hours tomorrow, Fed Jerome Powell's speech the next day, and then we do have Apple earnings the day after that. That is going to be Thursday. So those are the three big catalysts in my personal opinion. We do have Tesla earnings on Wednesday as well, and then Facebook earnings, Amazon, Apple earnings. Those are later on, I believe, next week for all of those companies. So not any big earnings that are coming out, but we did get IBM earnings, and it says IBM shares jump after company reports 6% revenue growth in fourth quarter. They did give some awfully weird guidance. They did say that they reiterated the mid-single digit growth on a conference call with analysts and said to expect between 10 billion and 10.5 billion in free cash flow for 2022. So that was on the better end range, but didn't really give clear guidance. So I think that was kind of lacking, but they did kind of give a little guidance at the same time, which was definitely good. And they had the best numbers in like 13 earnings reports. So definitely good right there. But take a look at this breaking news headline. Hong Kong, Japan stocks down 2% as Asia Pacific stocks tumble following volatility on Wall Street. That sent our futures down quite substantially. And if their markets play out anything like ours today and they see a big sell-off in the beginning of the day and then a rally towards the end of the day, that could set the US markets off on a very good note. And we could essentially see a muted day, if not a rise throughout the day, because the fear catalysts just aren't here. And that's what tends to happen with the Asian markets, with Australian markets compared to the US markets. They tend to go hand in hand with each other. So what I want to see is really this, the ASX 200 market start to rally. This is the Australian market, and I do want to see this recover, hopefully maybe on our live stream later on in just about an hour or two. That will be really good to see if they do recover. Am I tripping or is the chart lagging right now? I want to see, yes, this recover and actually see a bounce. Yeah, it's kind of tripping. It looks like it just fell off a cliff. But yeah, it went down and now it's starting to come back up just a little bit. So that is what I want to see. That is why we could see a bounce, and that is why I do think the Moass is almost 100% guaranteed in 2022. So hit that like button for me, consider subscribing to the channel, and let me know in the comment section if this made sense to you guys. If it does not, I will make another video and section it out so we go through everything very clearly and precisely. But other than that, let me know in the comment section as well if you are buying the dip, and if you guys want access to all of my trades in real time, as we are in real time hedging our portfolios each and every single day. Check out the link down below in the pinned comment, as well as go ahead and follow me over on Twitter. Love and appreciate you guys. Thank you for watching. I will see you in the next one.